Okay, let me inform everyone here. If you'll just give me a second. Greetings, everyone. I'm just sending out the alert to everyone that we're going live. So I want to just let Twitter know, as well as the newsletter, and then I will be right with you. You want to give your thoughts on the market while I'm doing this, Stephen?
Yeah, sure. And I'll just ask anybody who's in here, if you're not subscribed, we are 2 away from 400. So that'll be a big milestone. So hit that subscribe button if you're not subscribed. Today is a pretty bad day for the market. A lot happened since the close yesterday. Of course, we had some monster earnings reports from two of the biggest companies, Microsoft and Google. Um, they went in two different directions. So I'll let you speak a little bit more on why that might be the case when you're ready. But
I sent out to the newsletter. Now we just have to do X, and then we'll talk about it. And just so everybody knows, I'm trying to multitask here. But yes, basically we're actually going to do a pretty special thing today, where we're going to actually look at how I update the market numbers in addition to just the stock research. So it should be pretty cool on the back end of this today. Sorry, X is making me authenticate again right now, and then I will post and we will kick it off. But yes, it definitely has been a pretty interesting day. It's been pretty up and down, and we're going to talk about some of the specific earnings things, I think, in a second. But yes, and I'm actually even going to look at our current. I just posted to everything. I'm going to check out Prospero, and see how QQQ and SPY net option sentiment are doing before I give my general thoughts on it. Ooh, wow, brutal. QQQ is down to 7, and SPY is at 5. Yeah, that is not. Although I will say these numbers, especially QQQ, have been moving around more than I typically see them. So that has been an interesting, recent offshoot, I would say, that I haven't necessarily seen a lot of, where I typically see them in ranges a lot more. But QQQ net option sentiment, I've actually seen within a week vacillate between 5 and 35, which is a much bigger range than it usually does. So I would say that there's a lot of indecisiveness. And I think what we were talking about coming into earnings this week, and obviously we're going to talk about some of the ones that have already reported, is a lot of indecisiveness in the market. And I do think we've seen that manifested in who's reported already, where the market didn't seem to really be that sure one way or the other. And then in kind of some of this early reporting, we've actually seen, a much better reaction to Microsoft than Google. So I think that, that's a pretty interesting thing right there, in the sense that even, two companies that have big cloud divisions are trying to make waves in AI, there could be very different reactions in the market. So I think it's a very interesting time. Some people don't like volatility, but smart investors love volatility. That's where they make the most money. So volatility can certainly be on your side if you do the two things that I think we especially advocate for, which is have a solid research base for any of the individual stocks that you research, as well as having your own macro view, whether it be something that you have your own opinion on the macroeconomy or just sources that you amalgamate to have your view. If you have those two things, you have the foundation to do well in volatile markets.
so going into these earnings before, we were talking a lot about Google and Microsoft, and it seemed like I think you think both are good investments, but it seemed like you were more bullish on Google long term. So do you think today is an overreaction? Does it change your opinion at all? Yeah, so what changes after the earnings? Anything?
Yeah, I mean, I think the big thing is that, Azure's cloud um jumped. And I think, very specifically, there was, it jumped 29%. So, but I mean, they have a smaller cloud business. They're kind of like the least in kind of the cloud businesses. And, I would say that a big thing for Microsoft is everybody's obsessed with AI. And, you know, a lot of I believe it was 3% of their cloud growth could be attributed to AI, and that's pretty big um in terms of like what you could basically say as the total cloud growth. So I think that's a big part of that. But the other thing that I noticed is there's like massive capex, capital expenditures, for both Google and Microsoft around AI. Microsoft had a record 9.9 billion in capex, and Google was 8 billion. So you see them really heavily investing in, especially a lot of that is attributed to AI. So I definitely think that, you know, there's more room, there's more upside to Microsoft now because, the OpenAI acquisition and they're kind of making bigger waves in cloud as a result of that. So I do see why there was a reaction to that in that way. But, something that was, kind of, I think, ignored was that um, ad revenues have beat Wall Street expectations for Google. And, profitability was higher than the street's expectations. And YouTube, which I think is a huge thing. And obviously, I like YouTube. Our YouTube shorts are doing well. Like increasingly, I'm on it because that is, and they have, they did the big like football NFL Sunday Ticket. Um, so yeah, I would actually say that that YouTube is a particular the ad revenue around YouTube is particularly exciting, and I'm still bullish on Google. But I think the concerning thing, I think the market is super focused on AI right now, and I think what that kind of amounts to is that you know Google hasn't found its sea legs as much in terms of productizing AI, and Microsoft is way further along there, and you even had it like kind of hit that cloud number that I just quoted. So I think that is, um, I think that's basically where we're seeing um, a lot of kind of the difference there.
Yeah, and there's obviously like some nuances between the stocks. Just this year, Google has outperformed Microsoft, which is kind of surprising. I feel like the sentiment on both is that Microsoft is in a better spot on Wall Street. So like it's weird when you see that Google has outperformed them. So and since they had that outperformance, could the bar have been higher going into earnings, and that's why they react negatively, even though they beat on EPS and revenue, like one bad headline, and they just couldn't because their bar was so high they couldn't reach it.
Yeah, I mean, I think the main thing is just what I said, which is that um, essentially Google did not present around AI and figuring out how they were going to productize AI as well. And I really like, you look at the numbers and it wasn't that big of a disparity, in that comparison. Like, yeah, I would say like I was just actually looking at a graph and typically, like just to be very specific, like before this, it looks like Google outpaced Microsoft in cloud growth the last 4 quarters. So I think part of that is a reaction to that direct contrast, where like Google has been typically beating Microsoft in cloud growth, and Microsoft did this time. So I think that's partially it, and then partially like with all of like I think a lot of AI excitement is starting to be whatever like priced in, speculated on in these stocks. And we've seen it in Microsoft's forward PE, like that's about 10 points higher than Google's. Like people are just speculating on Microsoft's AI more. And I believe that speculation was somewhat validated this quarter. I talk about Google's brain, mu zero, like long term. I can't figure out a way where I'm more bullish on Microsoft, given that I think Google's brain is just like much better in terms of AI. And until that gap is closed, um, That's kind of where I see it. But I do think, what the street reacts to more, especially in terms of like, it's all about profits, it's all about EPS. And I do think that we're just seeing Microsoft have like a much clearer path to AI profitability than Google has right now. Um, so I think, but I think that's partially because they have that one really clear hero product. Like Google's obviously involved in, everything from, self-driving cars to, more with like something like Mu Zero, where you're talking about kind of like complex problem solving instead of just like language model interactions. Um, so I think that, part of why I like Google better and why I think it's a discount relative to Microsoft, especially trading at a cheaper 2024 PE, that's kind of what's confusing to me. Where it's just like, okay, as much as we want to speculate on, which of these, the very exciting future for Microsoft, and like they might get to AI profitability quicker. The hard numbers say Google's a discount relative to 2024 profitability. So that's kind of how I look at this. I'm just like, okay, I think Google's better off long term. And like next year, we still see better, like a better value to profits than Google than Microsoft. So I don't really understand why. I just think like honestly, what it comes down to, everybody's thinking about OpenAI, everybody's thinking about large language models right now, and Microsoft is further along in that. But I think the really big caveat is they're further along because they acquired a company that pretty much did all the work for them. That doesn't really make them AI visionaries. And that is, I think, if I could say one thing, why I prefer Google.
Yeah, so obviously we're highlighting the AI, and the whole market seems super hyper focused on AI. And a lot of things are down today after the Google earnings. So are you more worried about other AI stocks that have run this year, like Nvidia and others that are focused on AI, now that the market has shown it's going to react so volatility to that type of report?
Yeah, I think that's a really good question. But Nvidia is actually like in much better position to do well with the main problem that I talked about. Because if we're talking about like, okay, is say like a large language model, Chat GPT, is that on a good path to profitability? The answer is like unknown. Because as I talk about all the time, we don't even know the cost to run it. But in terms of like, okay, how's the product? How's the profits? NVIDIA, what we do know is they get paid out just for people thinking about and experimenting with AI. And they have a very clear path to profitability around those chips. So it's a different problem. It's easy to be optimistic around NVIDIA because anyone that even like tries AI out, like that will do well for NVIDIA. The difference between something like, Chat GPT or Bard, which are like largely being run at the expense of Microsoft, or like in the case of Google, not even as formed of a product, like those aren't profit centers yet. You have people just like trying those out. And like, yeah, like long term, it's pretty exciting opportunity, the more and more ingrained, but like the timeline on that is really unknown. Whereas like right now, all of these people like even trying out, say, Chat GPT. I mean, I don't know this factually, but I imagine it runs on NVIDIA chips, like a lot of things. So, right now, even that process that we just talk about all the time, where Microsoft is footing the bill for everybody trying out Chat GPT, that's a loss leader for Microsoft while it is the profit center for NVIDIA. And I think that's a big difference right there.
That's a really interesting distinction. I never thought about it in that way. So that's good to highlight for people because I had never thought of it like that before. And today we still have some more earnings. We're in like the dead middle of earnings season. More big companies like Meta, IBM, ServiceNow, and I think they're all down today, like most stocks. So maybe it'll be easier for them to beat based off what's happening today. But what do you have to say about some of those companies and their reports?
I do think that like Meta got hit a little bit today, and obviously that we talk about Meta all the time. Um, but I do think like with robust ad revenue, I was originally going to maybe adjust my meta position, but with like pretty robust ad revenue, like Google's ads, like we talked about, grew almost 10%. That's good for Meta. I think there was a negative news event like Europe, like there's always these things with Meta that like circle around. I do think save that we might have seen a better result, but also it's just been a really bad day, obviously. Um, and I think a lot of people are and Google's return like weren't even that bad. Like I just think there's a lot of concern. They were looking for amazing to kind of carry the market forward. We've obviously been concerned about some of the approach. Um, but yeah, Meta is definitely something that, given Google's results, like I'm still optimistic and I think I'm going to hold it. Like I have a 2x position in my model portfolio, and I do believe I'm going to hold it because of that positive ad revenue. And Meta is still like a new kid on the block in this like earnings report, right? So in terms of like AI specifically, and we're like, oh, like Microsoft has a lot of room to grow on it because they're kind of like a new entrant. They just made this acquisition and figuring out how they can make more and more of it. But Meta, even more, like they have a great training set, as we've said, in terms of like conversations and interactions between people that could form well to like the current generative AI applications. They have a lot of new products that they've been talking about rolling out in 2024. So I think, yeah, I think they have a lot of upside in terms of ad revenues coming in well, and any new announcements on how close they are to productizing some of these, like I would say, conversational AIs that play into some of their products. And like that is huge potential for Meta because they've just been in this position where they know, and everybody's like kind of like, even the people that keep Facebook that I know that have had it since like college, like absolutely kind of resent it a little bit, don't like it, think it's like, kind of an evil organization, but they're just like, oh, like, but it allows me to like stay in touch with my friend or see like an event or like blah blah blah. Like there seems to be like pretty bad reasons why everybody like keeps it, but most people keep it. But I say all that because like if they told me that Facebook was going to cost money, I would like get rid of it in a second. Like I'm very price sensitive on that. But, all of a sudden you start to roll out kind of like integrated chat apps because I do use Messenger, and one of the reasons I use Messenger is because I can do Messenger on my computer and my phone. And like some people have Apples and they do that, but I have a PC, so I can't do that. So I actually like it. I use Messenger and like, but I wouldn't pay for like a generative AI application. But there's a lot of people that auto complete conversations, draft things. Like there's people I think, especially like younger people that want to like tinker around with that kind of tech, might pay $1 a month, $5 a month, and all of a sudden that's a new way to monetize their massive user base. So the one thing I'm concerned about, especially with Google producing positive um, ad numbers, is if Meta disappoints, that's going to be very bad for them because Google posted good numbers, and like we see this like comparative thing that we saw within Microsoft and Google. That's going to be bad for Meta. Um, but I do think when I saw that Google's ad numbers were good, I became more optimistic about Meta's earnings. And then in terms of IBM and ServiceNow, IBM is on a real bad option sentiment trend heading into earnings. Um, and like if you look at it, IBM's kind of been in like the AI game for a while, or at least like similar things, similar industry to like what a lot of these AI companies are doing. And they're kind of like an afterthought in it now. Like, yeah, like B2B, a lot of people, like old people, will still go to IBM, but they are, I'd say, just kind of like inherently at risk. If they report any disappointing or even average numbers, that could hit them very hard because a lot of people are coming for their business. Um, and then what I would also say, I'm actually just gonna, sorry, make this darker. I don't know. I feel like sometimes these are lighter. I get easily distracted sometimes. Um, but yes, IBM. I definitely see on a bad trend, and I do think people tend to be a lot more sensitive about that, especially because they kind of like had their shot to be early entrants, like, make the market really. And they've like failed at that. ServiceNow is the opposite. It's actually in a really good net option sentiment trend. Um, so I'm optimistic about earnings on that one. And I guess we'll just have to see. But what I like about both of them and what I talk about in terms of net option sentiment all the time is I like to see consistency, not volatility. And we definitely see in both of their patterns a pretty consistent down pattern in IBM over the last few weeks, and a little bit more of a volatile, but especially leading into earnings, a more consistent up pattern in ServiceNow. Um, so yes, I think that we have a pretty clear indication there, but we'll see what happens. I think it's pretty easy. Like right now, I think it's pretty easy to say I don't really want to bet on anyone's earnings.
So one thing I want to ask you about is if the market continues to react negatively to all these earnings reports, do you think that'll affect the Fed's path at all and what we hear from Jay Powell? And maybe we could see the end of hikes. Like I think one more might be priced in right now, right? Or maybe none at all. But
No, no. What we've been seeing is that they were pricing in like a decent chance of another hike, but no, we saw towards the end of the week that yeah, those actually really thinned out. So I think you're right that we're seeing definite expectations of another hike lowering significantly. Um, but that and a down market, like we're saying, is inherently pretty concerning because you'd like to see the market respond well to those probabilities decreasing. I think that kind of says what we've been saying that people did, and we've been saying this since last week. It looked like people were disappointing earnings season. And when it looks like people are expecting one and then it comes, maybe that's a bit of a self fulfilling prophecy, but take cover.
well, we still could possibly be saved, I guess, because we have, the big boys like Amazon and Apple left. So I guess it's not over. We'll wait to see what happens. One thing I wanted to ask you about is if people have positions that they're down on, and this is a topic I don't think we've ever talked about. So I'm trying to think of, some new topics to get some fresh ideas. Before the end of the year, would you suggest if you have a position that's down to like harvest your losses, or do you think that's kind of just like a waste and you should just hold things, and what's your strategy or philosophy behind that?
As a general rule, I mean, it really depends. People should, as a general rule, talk to a tax expert. Don't take general advice. But if I'm going to give like some pretty simple guidelines, it's if you have a big earning year, take losses then. A lot of losses like carry forward, but I think the biggest rule is unless you're talking to a tax expert, don't take amateur tax advice. You might not really know all of the impacts of, exactly your decisions, what you can carry forward, what you can't, what credits can be applied to, whatever. But like I would say generally, you should make your stock decisions based on what makes sense. I can't believe how many people in the AMC trade I saw talk about, oh, well, like hold for the tax loss or whatever, and then lose like another 40, 50, 60% on their investment. It's like, no, like there's going to be no tax savings if you're just like holding a stock that's going to go down and maybe go down to zero. So I think that that's a pretty important point. Uh, but yeah, I think that to summarize, I would say the three rules are: first, make the stock decision for the stock. If you think it's a good investment, hold. If you don't, sell. Don't let taxes impact how you analyze that top level decision. I would say the second most important thing is talk to an expert. Don't take amateur advice. Because a lot of the times you might not actually know how it's going to impact, and there's a lot of misinformation, a lot of people who think they're informed on this subject that don't, or a lot of people just like taking their particular tax situation and assuming that it applies to you, or they sound smart or whatever. But there's tons of rules here, and just like really just like you can do your taxes on your own. And like I'm someone, I've taught myself accounting like 20 years ago, and then took accounting in college. So I know a decent amount about this stuff myself. Um, and I still talk to a tax expert every year. It's just a way better decision than trying to do it on your own. And like generic advice, I'd say is really bad in these situations because a lot of the times, what someone might be telling you is what their accountant told them to make it simple for them, but they may be leaving a number of important factors out. Um, and I would say the biggest lines that you should just like not cross at all are like if you have any independent contractor work or an entrepreneur or anything like that, or have an LLC, anything like that with people that work full time, those groups do not interact in terms of being able to give tax advice to one another. So don't take advice from one side or the other if you have someone that has any income that isn't just traditional W 2 income, which, if you have traditional W 2 income, um, you might not need to talk to a tax expert unless you have stock transactions, unless you have all these other things. And then, we're right back to recommending that.
Yeah, so hopefully that's helpful for our viewers. If you have any questions, feel free to comment. We got a few today. So, and I'll ask again. I believe we are still two away. Yes, we are at 398. So, two away from 400 subscribers. If you haven't subscribed, please do. We would love to see that number hit 400 today. The other question I had for you, George, was so I think a lot of investors, they get a sum of money that they want to invest and they just want to put all that money to use at one time. And I wanted you to kind of explain what dollar cost averaging is and if people should do it. Because I feel like it's human nature to just like put all the money in at once, and maybe that's not the best idea all the time.
Yeah, so dollar cost averaging is a discipline of investing where you're more concerned with allocating a certain amount of dollars to your portfolio versus, you know, buying particular stocks more based on like, what you might think or on news events or things like that. It's a more organized way to approach it. And overall, I think it's a much better way um to approach it. But we actually have some like long-term investors that use, Prospero for like I would say enhanced dollar cost averaging, where instead of just allocating a particular amount to each stock, they'll actually allocate the amount based on what looks good and what doesn't in the signals. And I actually think that's a really good way to use the signals as a long-term investor. Um, even like, even if you come in, you're just introduced to the signal, want to like, it could be too complicated for a lot of people to maneuver their portfolio around based on where the signals are. But if you're just allocating new dollars that way, I think that is a very, very good way um, to think about integrating our signals into what you're doing.
Yeah, I agree, and I hope some people look more into that because I think it really helps with the volatility of a portfolio, which can scare some people sometimes. Okay, so our segment that we close these Wednesday streams with before we go into George's model portfolio update is the buy, hold, sell, where I give George three stocks and he has to choose which ones he's going to buy, hold, and sell. Today, since I heard so much news and the market's going crazy about how the big seven stocks in the market could be over, we're gonna pick three of those. So I have Google, Meta, and Amazon. And George, buy, hold, sell.
Over. I didn't hear that. That's hilarious. Uh, I do not think any of them are over. Like if like I would say Apple is the closest thing to over of anyone, but like again, like you're betting against Apple, which I wouldn't necessarily like. But by the way, just to be clear, I wouldn't short any of the big seven. But if I was going to go long, like two stocks in the big seven, it would probably be Meta and Google, given their discounted forward PEs. Um, but for the purpose of this game, buy Meta, and it's for all of the reasons that we named. Like, I like that they could have the generative AI monetization streams for their massive user base, and ad revenue has been robust for them. We talked about this. They were, other than Nvidia and Tesla, of the big seven, they had the biggest growth last quarter. So we'll see if they can do that. They can have robust ad revenue again. And I mean, that's the thing. Like, Google search can be, limited, whereas Meta just seems to like be like branching out into all these countries and like consistently. And it's kind of like, it's kind of been so. What do they have? I think they have a billion users. No, I might be wrong about that. Don't quote me, but I think it is something massive, like that. Google's the hold. It might be, long, like on a 1 year horizon, it might be my second favorite stock to Meta. So that's an unfortunate hold. But yes, I mean, legitimately, there is a possibility of a threat to some of their core businesses with OpenAI. Like, I think longer term, I really like the AI applications that they could develop with their best brain. But yeah, in the short term, that is a little concerning. Um, but it is amongst Google's amongst my top 5 stocks, so that's a rough hold rating for it in this game. And sell is Amazon. I mean, they're trading surprisingly expensive. I think 50x on their 2024 earnings, and they're not growing. Like, Tesla, that's only a little bit below Tesla and Nvidia in terms of 2024 PE. And they're not growing like those companies. And I think like Amazon's biggest problem is its name and its brand, and like the fact that people are willing to overpay for the stock as a result of that. So that's rough. I mean, when I talk about it in a 10-year time horizon, obviously people have heard me say I love Amazon's ability to enter new markets more than any other company. So this is also a rough sell, but them's the breaks, as my mom used to say.
Yeah, I knew it'd be tough today. It's like picking between your children with these. They're all good companies, so I knew it'd be difficult. We got a question if we want to answer this while we're moving into the model portfolio from Jonathan. He says, in the newsletter, you said to sell Meta and Google, and then these stocks dropped. What signals did you see to decide it was time to sell them?
Well, Meth in particular, it was like it had a stranglehold. It was looking like 100 net option sentiment for a while. And I saw a lot of vulnerability. Like, I actually see more data than you guys do, but I saw a lot more volatility in Meta and just general, like a general downtrend um in its numbers. And if I have time, I might actually like pull up the Meta time series. We'll see if I have time at the end. But Google was some of it was just risk management that in this I don't like playing earnings. Um, but yeah, I definitely saw I did, it's an easy answer, but I didn't like the net option sentiment trends in either one. Oh, and the other thing, wow, I forgot this. Short pressure went up for both of them. And just so people know, a component of short pressure is price and volume increases. And there weren't really those. So when you don't see any price increase components, or you don't see like big price increase, but you see a big jump in short pressure, it pretty much just means it's being shorted much more aggressively. And Meta actually got filtered out of, I do a big investing letter where I do the same screener every letter. To be able to just have like some source of objective truth. And that's the first time I'd ever seen Meta filtered out for short pressure. So that was very impactful for me, despite it being probably my favorite long-term stock. That was a pretty serious sign. I wasn't planning to drop Meta anytime soon. That I thought was going to be a much lower hold. So yeah, that short pressure was scary.
All right, Jonathan. Hopefully
Jonathan, did
that
that answer your
answers.
question?
Yep. And just for me, following up on what your answer was, it's interesting for me to see how like the change in the net option sentiment is so important. Like if it goes from 100 to 90, that's worse than like going from 70 to 80, or like the trend of it is so impactful with your decision. I find that interesting.
Yes.
Oh yeah, Johnson said thank you.
I like the window for this. Well, whatever. I guess I'm still going. I've like this is very weird. Well, it doesn't really matter, but I guess I'm gonna start the wait, can you still hear me?
Yeah, I got you.
And I'm on the screen?
Yeah, you're good.
Don't actually have a window for it. I mean, all right. Text me if you lose me. I like don't have a window open for this.
StreamYard's watching always.
I kind of want to just like I wonder if I just like go back into StreamYard, it's going to um all right, I'm just gonna oh no, I can't share my screen unless I'm in here. Um this is so weird.
Yeah, strange. I still got you.
Yeah, I don't have it. All right, if I'm gonna enter, I'll be right back if you lose me, obviously.
Hmm. I guess all of our viewers right now must be subscribers because we are stuck at 398.
Oh my god, I've got a weird how do I do this? Sorry.
I think I got you on two different things now.
No, I know. How do I know which sorry. All right, is this me here?
Okay, I see you in two different things. So I'm gonna add you to the stage on this one. Now I got you. You're in two different screens. Go wait, let me remove you here.
I'll remove one of me.
For the people, this is gonna be worth the wait.
Oh, what?
All right, I think we're good. I'm not sure what's going on.
Yeah. Oh no, I have this weird echo.
Oh, you have an echo now?
Yeah, I do.
We're playing musical chairs right now. Oh, wait, here we go.
I don't like this is very, very weird. I don't know. Oh, that okay. That was super weird. It was like
Better?
not showing me, it was like not showing me my windows. They just like had disappeared. All right, we're back in business.
That's
All
gonna
right,
make the blooper reel.
we've got a lot of work to do. Oh, what do we do first? All right, let's take a look at um you're actually gonna get to do the assist here, Stephen. Um
I'm ready.
when I tell you, you're gonna have to tell me um you're gonna have to tell me what uh net option sentiment is on
Gotcha.
QQQ and SPY. That's your little part to play. Um okay. Here we go. I am did I share my screen yet? Oh no, I didn't. Here we go. Entire screen, screen one. Okay, you can see me now, right?
Yeah, it's loading in. Yep, it's good. It's up there now.
Oh, here we go. Now we are going to do square. We're going to do from square one. We're going to update the market level graphs. And you guys will see how I do that. All right. So because that's where we have to start.
Can I ask you a question while you're doing this, or
Yes.
are you?
As long as it's not too hot.
Is there a reason you don't look at like the Dow net option sentiment as well?
I don't think we even have that, but I mean, there's a reason. Like, one is just like there's a reason we look at these two, and it's basically that um, one is uh, one is obviously much more focused on tech, and one is much more focused on um, one is much more focused on non-tech, and that's really the only two things we care about. So it's really just that simple. Nothing too complicated there. Um, oh no, this is wrong. Wait, what? That's the problem. All right, now we need to do this. So like, yeah, like to me, like it might confound the data a little bit is like the expanded answer because um because there's overlap between SPY and Dow. So it's not necessarily data that I really care about. This is how I make the other graphs. Oh, for you. It's about to be your time, Stephen.
I'm ready.
You should tell me very soon what the current net option sentiment is in the app for the SPY.
That would be 9.
All right.
You do have the Dow, by the way. I
What?
just looked. The Dow is in Prospero. I got
Is or
curious.
isn't?
It is.
I didn't know that. That's pretty funny. Um, um, sorry, I have to take care of one thing. Life doesn't stop. Um, all right. So we have this. This is no longer going to apply. This got moved because we rotated our like bull and bear lines a little bit. So this is actually down here now. I always like think about the cost of this graph moving when I do this, but you're going to get to see my whole thought process. And before you see me write anything, Stephen, why don't I get your thoughts? What do you think of this graph and this trend? We're getting you doing my job live.
It's tough for me to see right now. Let me make it bigger. Okay. Uh,
If you can't see, that's not very good hope for anyone else.
I have the YouTube and the StreamYard open, so it's kind of like half and half. Now I can see it. Looks pretty bearish to me. I find it weird that it popped so much and then went back down during the day.
Yeah. I think that we might have seen some like uh some some speculators that thought you might be able like I think that's kind of like what we were seeing on some other things, to be honest, where it's just like we're like, well, I didn't even think that like the earnings are that bad. It's weird. Like I think the market is just being like is showing like basically the one thing that actually we have been saying consistently, which is that we needed a big tech earnings to carry the market, and even a decent one didn't look um, didn't look like it was going to do that. Okay, so right now, I would basically say where were you on that one, Steven? All right, we're doing that. And then, oh my God, it's 3:44 already. This is. I don't think I even have time to do the QQQ. We got to go right into the model portfolio, and we also have to like we have to look. We were thinking about dropping some of. I'm actually like having to do the basic newsletter here, as well as the other one. I'm doing like the traditional newsletter picks because BPMC is reporting tomorrow morning. So I might need to get out of it. All right, we're going to look at the daily. I mean, I think I wanted to probably regardless, but what is it trading at right now? How much room do we have? Down 4%. All right, I'm going to take my gains on that. I don't really want to mess with earnings on this thing, although that is a very nice setup for earnings. Like, you do never know if that is basically like what we always talk about, which is just people like shorting it opportunistically. Um, all right. So BPMC, FRHC is another one. Like these, like, where are you? 1.95. This has really turned on the 40-minute. Let's check out the daily. Okay. I don't need to drop this now. Let's just check out. Oh no, we checked out 45 minutes. So let's just check out 4 hours. Um, no, we're not gonna get out of that. IRBT is the other one. Yeah, like a lot of it was surprisingly 4 hours. That still looks good. We're not getting out of there. I don't know what Jim, my technical advisor, is thinking on this. All right. So that's all that we need to do. We are going to get out of BPMC. But I don't think we're going to get out of any of the rest of the stuff. So I just have to remember to screenshot that before close. Um, and then let's do we'll do the typical model portfolio update that everybody knows and loves. Oh, that is my corporate credit card information that I hope no one screenshotted. Oh, we have to like cut that. Ugh. Steven, can you cut that?
I can, yeah, I'll have to repost this as a video
Yeah.
and take it out otherwise.
Actually, I just have to lock that card. Oops. Sorry, everyone. Anyone
Live
can
streaming is a
screenshot.
dangerous game.
Yeah, live streaming is a dangerous game. Um, that's hilarious. Um, all right, dangerous game indeed. Jesus, what a day! Oh, this is the first check that I do. I'm just going to see if any of these are worth selling. So I just do a quick pop that in there, pop that there, for that. Let's see. I should have gotten rid of. All right, we need to get rid of these three. What I typically do here is I just pull up. TH. G. Xerox was a big win for us. Um, did I get ousted again? I thought I sold out of that. ADC. MC. What's going on with MC? And that's in bad shape. Let me look at the trend on net option sentiment. $70, $55. Yeah, I mean, I don't care. I gotta go. I gotta trust net option sentiment. See, we stick with the signals. Oh, that's GPX was doing some weird stuff today. No. Doesn't get my attention right now. Whoa, what's going on here? We're just, you know what? No, we're not messing around with these with this 90. You know what? We're just gonna take our. This is just too low. Okay, so this is gonna be crazy. What is this? NTRA, IRTC. All right, we got those. Now we have to go into this. Copy this letter. I have to make sure I sell BPMC before close. Okay, we want to grab this. All right. A lot of stuff going on here. Ugh, I'm so annoyed that I did that credit card thing. Uh, Nothing we can do now. We're doing that, and then we're taking this filter.
We got an interesting comment from Terminal Velocity who's talking about how he doesn't like the color scheme, the current color scheme of the Prospero app, but I think we have good news for him, George, right?
Yes, there's a new one coming.
There's actually the newest video on our YouTube channel is the demo of the way the app is going to look. So you could go check that out.
Well, I think the color scheme is going to be much better. And I was just talking today about having like a dark and light mode because I know a lot of people have very big, very big important feelings on that.
I'm a big dark mode fan for apps.
What?
I always tend to seem to like the dark mode better for apps.
You know, some people, this is our country is very divided on this. I think there's some very
Maybe you
loyal
should do a
dark mode
YouTube
people
poll.
and light mode.
Where do you stand, George?
I'm a light person. I don't. I like to be cheery and bright. It fits with my personality. A lot of the clothes I wear are
The
brighter.
phone battery,
Um,
though, the phone battery.
yeah. Does it use more? See, I know I don't want any of these down here, or maybe I do. I'm gonna start at twist. Um, I want to go back to that. See, sometimes I cut these. You guys are seeing a little bit. Sometimes I'm like, no, I don't want that. I'm running so low on time. Here we go. That's done. Um, mm, Now we got to do our trading view thing. Actually, like I'm just gonna get rid of BPMC. Um, sorry everyone, because I don't want I don't want to lose my shot to do that. Um, so here I go. Gonna do that. Exiting, and then I will be back to finish this up. I'll be kicking myself if I don't do it, and earnings are bad tomorrow. So thank you for bearing with me, everyone. This is more phoning than I normally like to do on the live stream, but okay, done with that. Now let's see if there's anything interesting here. I mean, car, that's really not Molina Health. I don't think I like any. I want to add any of these, like Melly, maybe. No, I don't want to. Okay. Let's do that. Looking at the technicals. Yeah, we're grimming. Welcome aboard. CSGP. I've never seen it. I always like when I see new ones. Here, I'm just gonna move that right next to it. Still have a little time. Co-star group. Yeah, we're gonna do that. Just because things. I looked at VNet yesterday and it wasn't good. But no. Oh, see, I'm glad I didn't add VNet yesterday. See, that's where technicals can save you. It's bam. I don't. That's the right. I think I just clicked wrong. How are you doing, Brookfield Asset Management? You are coming into our portfolio. Oh, I skipped INSM. That's normally, I checked on it yesterday, but see how you're doing today. Yeah, I passed on it yesterday. It looks like for good reason. All right. SRCL. Doing some good new bears here. LUMN. We're doing it. We just dropped. Oh, I think I've messed with Nextera before. Nope, not doing this. We're done. Oh, what's the current net option sentiment value for SPY and QQQ? Can you look those up?
Yep, on it. SPY is still 9. QQQ is 12.
All right, we did it. I think. All right, that's
Just in
done.
time.
Just in time. I do want to check one thing. Part of me maybe wants to exit IRT. No, I saw the technicals on IRTC. It didn't do it. All right. We're gonna stop sharing. Um join the dark side.
So I have to share this because I find it so interesting. So I'm looking at the Dow net option sentiment, and I think you'd like the trend. It's gone from like 14 to 46. It's showing.
Is that Dow?
Yeah,
Are we sure that's Dow and not? I think that's like Dow Chemical, not like
no,
the
it's
Dow.
not. It's DIA, Dow Jones Industrial Average. It's very
Yeah,
interesting.
interesting. See, I haven't the other ones I've worked on more. Um, but yeah, what is this too late? I definitely got it.
That was when you showed your card.
Oh, yeah. Well, sorry, card's locked.
So, so what are we gonna do? Am I gonna delete the stream or?
No, I'm just gonna get a new card. It's like not. It's not.
Oh my god.
It's not worth it. I mean, it's just like it's dumb. I should not have that. Like, we normally delete those Slacks. Like, that's why we actually send them on Slack when I do that, because you can delete it on like a text message that's just like there.
Mm-hmm.
But my CTO did not have time to use it. So yes.
Mm-hmm.
I mean, that's the nice thing about technology though. I could just like pop in an app and um lock it.
Mm-hmm.
Pop it and lock it. Um but yes. Hopefully terminal velocity uh you like the new colors. Let us know what you think, or even if you want to be an early tester. Um And I know I owe you an email, Tyler. Thank you for coming. Thank you for coming to the live stream. I'm actually going to respond to this right after. A very good way to get someone to remember they owe you an email. By the way, if someone ever owes me an email, I'm going to try and come to their live stream. All right. If there aren't any other questions, um, we'll end for the day.
Yeah, so terminal velocity, go check out that video and comment on it and let us know if you like it more, because that would be great feedback from people who actually use our app. So, but besides that, I think we're good. Got some big earnings on the way today.
Yeah, I didn't. I got out of. I got cold feet on one of my meta positions. I so we'll see what happens there. But it's one of those things where like we're so all in on meta just in the app and everything. I'll probably be kicking myself one way or the other. But I still have one position exposure to it, at least. But yeah, if there's no questions, uh, I have to finish writing that newsletter I started. Um, that I thought I was going to complete during this meeting, but didn't. All right. Thanks,
Mm-hmm.
everyone.
See everybody Monday. See you, George.